Hello and welcome to our monthly update. I'm Corey Bannister, Chief Lending Officer at La Trobe Financial. As Chief Lending Officer, my role is to oversee our lending program, including credit origination and assessment, with the key responsibility being to maintain the credit quality of our loan portfolios and managing market dynamics. If you like, it's finding the highest quality assets for our retail and institutional investors that fit their funding appetites. After a stubbornly high series of readings, overall volumes of credit in the wider market have started to normalise. This is to be expected, particularly in light of the softening property market, which we'll cover shortly. La Trobe Financial undertakes a rigorous, granular credit assessment for every loan we approve, blending both automation with a human element to achieve a very well-considered loan approval. And while we are not simply a credit score lender, we certainly do track the credit scores of our applicants, which gives us a useful insight into our overall credit quality versus our peers and the Big Four banks. From this, we see that our credit quality continues to steadily improve, a great outcome in uncertain times and evidence that while we are growing the business, it has not been done by introducing additional credit risk into our portfolios. From this data, we can also see that we significantly outperform our peers for credit quality. In fact, our borrower credit quality is actually closely aligned with that of the Big Four banks. This underscores the work our credit team undertake, our approach to assessing credit, and our proposition as a genuine alternative for high-quality borrowers looking to transact. In this month's portfolio and business update, our Chief Investment Officer, Chris Payton, referenced our low level of borrower arrears. This is consistent right across the wider lending sector. As a regulator of Australia's financial services industry, APRA details quarterly sector results for arrears, and this shows only a small increase through the COVID period, which has tracked lower ever since. The most recent reads of less than 1% show that Australia's lenders have lent conservatively. Borrowers have built in significant headroom into living expenses, and that the sector is incredibly well placed as it navigates this cycle of increasing interest rates. Of course, one of the most popular topics of conversation continues to be Australia's residential property market. It is well known how well Australia's property market performed in the post-COVID rebound, with many regions increasing in value well above 25%. And what must be remembered is the property market is just that, it's a market. Markets go up, down, sideways, and everywhere in between. 12 months ago, we saw a peaking market beginning to moderate. Most thought we would see a correction in the order of 10%, plus or minus a margin, as the froth and fervour dissipated. Since then, we've seen bad news for property driven by a war, spiking inflation, and interest rates increasing well ahead of earlier forecasts. In all of that time, though, and after all of that bad news, the forecast? It's more likely a 15% fall in property prices as a whole, plus or minus depending on the location. Considering it is a market and its extraordinary growth in the total absence of migration, it does appear to be a very resilient one indeed. At La Trobe Financial, we take a conservative approach to counter the risks of a volatile property market. The maximum loan to valuation ratio in our 12-month term account, for example, is 75% for residential property. Our maximum LVR sees a risk-adjusted, downward scale introduced for other asset classes such as commercial property, construction, and vacant land. Across the portfolio, the average loan-to-valuation ratio is just circa 65%. Again, a very conservative position and one that we are eminently comfortable will provide our investors with downside protection right across the economic cycle. Thank you for watching. I hope you found these insights useful, and if you have any queries, please contact our asset management team on 1800 818 818.